Hello, my name's David Miller. I'm the manager of Nexus Global Solutions portfolio and the co-manager of Dynamic. I'm speaking to you from London in its early July, and the sun is shining, life is good. So we've just finished another good month for investment. Solutions is up by 3%, Dynamic by 5% in 1 month, which brings the year-to-date totals to 11% and 17%, exceptionally good returns. And that, I think, is a good place to start the discussion as to why this has been happening and what next. Before I do that, though, asset allocation, that matters, but we've not been making many changes. Dynamic is nearly 95% invested in global equities. Solutions, more diversified by the way it's structured, is about 56% in equities, 28% in fixed interest, and the rest in alternatives. I'll come back to the detail in a moment. Not much change to that this year, in fact. But markets have been very strong. Why is that? Well, it could be economic growth is going very strongly, and the answer to that is no, not really. Economic growth is okay. Nothing to write home about. Politics, well, certainly not any help from the politicians this year. They've created uncertainty in almost all parts of the world. The key thing so far this year has been the cost of money. The Federal Reserve in the US has indicated that it's going to reduce interest rates this year. We're waiting for news in July, later this month, as to whether they'll start right now. And this is good news for those who own financial assets, those who are invested in markets. So that's really my message for this month's report. It's been a full court press across all asset classes. Very unusual to make money in equities and fixed interest and gold, which is in solutions, all at the same time. And I think this does come down to the cost of money. On top of that, and what was really the icing on the cake at the end of June, is that trade tensions between the US and China now seem to be moderating. I don't think it's over. I think a truce has been declared, but that's good enough for the moment. All that together made for a good first half of the year. What about the second half of the year? I'm coming down now, I think, to the details of the portfolio. We pick stocks. We focus on companies that make profits, pay dividends, have sound balance sheets. Might sound old-fashioned to talk about quality, but that's what quality is all about. And also liquidity. We want to be able to buy and sell investments that we choose to put into the portfolio and then exit. And that's the critical part of these portfolios, and that's what's made all the difference this year. And the companies we've selected across a range of sectors have made very good returns for us. It's a combination of new and old. So in the new section, I would call active, which has been a great performer this month. It makes and helps with the technology for self-driving cars. Then you have Apple, which used to be young and upcoming, but is now very much part of the establishment, producing good numbers. And then down to what I describe as more of the old economy, American Express, Visa, we all know what they do, using technology to deliver exceptionally good profits growth. And then simple things like construction needs machinery to dig holes. Instead of buying those machines these days, the industry rents them from companies like Ashtead and United Rentals. All of these are in the portfolio. All are making good returns this year. So next few months, what's going to happen? Well, we have over the next few weeks the company results season, and that will be important because companies will have been experiencing all the uncertainties that we've all seen in the headlines, whether it's politics, trade wars, the like. And so when they deliver their numbers, we'll see what those numbers are like, and we'll also hear what the chief executives have to say about business and the future. Very important to keep an eye on that. And then after that, I suspect we'll go into the August lull. One can never be absolutely certain about that, but let's use that as the working assumption for the next couple of months. Before everybody returns in the autumn, where we'll have to face up to the reality of Brexit finally or not. Maybe tensions between the US and China will resurface. One doesn't really know about those things. But as I said, they're not really driving returns in markets at the moment. For us, as the investment managers of Solutions and Dynamic, it's all about picking companies. It's all about making sure we're in the right asset classes around the world to deliver consistent returns to investors. So far, so good this year. That's it for now. I wish you all a good summer and look forward to reporting to you again in a month's time, in August and then again in September. Thank you very much.